What is the annual investment allowance and how does it work? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. You've heard about capital allowances and you know that there is something called the annual investment allowance. Well, what is it? Let's dive into that today and find out exactly what you can be claiming in your business for the annual investment allowance. This is an amazing allowance really because it allows us to buy something in the year. So let's go with a computer of £1,000 and now I can claim the whole £1,000 against my business profits. So normally for assets we might have to look at spreading them over a number of years as we use that asset. But with the annual investment allowance, it gives us that ability to claim that £1,000 in the year we purchase it in full to help reduce our taxes in our business, whether that be self-employed or whether it be in a company. For example, if you buy a van in the business, you may end up having to pay some tax back because if you buy a van for, let's go with 20,000, you claim 20,000 against your tax bill, which is fabulous because that really does probably make quite a bit of a difference. However, if you sell it in 2 years' time for 10, 15,000, you're now potentially going to be paying a little bit more tax. So just because you've got tax relief when you purchase it doesn't mean you're not going to maybe have to pay a little bit of tax back in the future. But it depends what you are doing with it. If you buy it and keep it till the day dot and it dies, obviously you're never going to be paying any tax back on that asset. Now, can you just claim whatever amount for the annual investment allowance? The answer is no. But if we're only spending £1,000, we're definitely going to be able to be claiming it back. However, if you're spending a little more than that, there may be some limitations. The annual investment allowance figure of what you can claim up to has been a bit of a political toy to try and make it look good for businesses. So it has varied over the years. The amount allowable at the point this video is released is £1 million. So if you spend up to £1 million, then you can claim anything on your annual investment allowance. So for a lot of businesses and a lot of property businesses, which this is focused at, you're probably never necessarily going to get to that sort of figure. It's more going to be bigger, medium-sized companies that are spending a lot on fixed assets for their employees, for their business, that may be having more of an impact. So generally with who I'm speaking to, probably you today, you're probably going to be able to claim all the different things you buy out as assets in your business as an annual investment allowance. Check out the video on what assets are to find out what is classified as an asset to see what you may be able to be claiming this on. This leads nicely on to what is not claimable because there are some things that you cannot claim the annual investment allowance on. And a big one is business cars. So if you are buying a company car or a business car, you cannot claim capital allowances on that. The other things that you can't claim are on things that you gift to the company, so they've not been purchased independently from a connected party. And you cannot claim on things that have been given to the business. So there's a few prerequisites there, but that's all. Most other expenses or assets that you are buying, you will likely be able to claim the annual investment allowance. One impact though is you can only claim the annual investment allowance in the period that you bought the item. So if you decide that you don't want to claim capital allowances in that time period, then potentially you will lose the opportunity for using the annual investment allowance and you'll go down to the writing down allowances, which you can find out about in the capital allowances video on the channel. The annual investment allowance is claimed on your tax return. So when you complete your tax return, it will be included as part of the calculation for the taxes to reduce your taxes. If you don't want to claim the whole allowance, then you don't necessarily have to. However, you would then go to the options of the writing down allowance rather than the annual investment allowance. So it kind of depends how you want to fit everything together for your tax calculation. Most of the time your accountant will probably be looking at this for you, so it's maybe just asking the question so you understand what has and hasn't been claimed. For those that are self-employed, there may be some restrictions where items that are used outside of the business, you may have to do a restriction on the capital allowances an annual investment allowance that you do claim to reduce to cover what you are using it for business purposes. But again, this is slightly quirky and something that hopefully your accountant is going to be assisting with from that point of view. We've obviously said the annual investment allowance is quite a large number, so most people that I'm talking to today are probably not going to be going over to it. But if you do happen to go over it in a particular year, you may be on a very big commercial project, so you are hitting that limit, which would therefore mean anything over the allowance at the point in time that you are doing the claim, you go on to the writing down allowances. So there is still tax allowances available for you, it's just more restrictive than the annual investment allowance. And check out the video on capital allowances that just goes through what the writing down allowances are. A final point to note for those that have multiple businesses that they are in control of. The annual investment allowance is available for each business. However, if you have connected businesses, so for example, I have my company which I'm the shareholder of company A, I have company B which I'm also the shareholder of, those two businesses will actually share an annual investment allowance. So you can't just claim £1 million in one and £1 million in another. They would both have to share that £1 million. Now, there is no set criteria of how you share that. So one could have 800,000, another could have 200,000, but you cannot have £1 million each is basically something you need to be aware of. So if you do have multiple companies that have the same controlling partnerships, so it may be there's two of you that own one, two of you that own the other in the same proportions, they are under common control. If you have one where you've got a JV partner with you, one where it's your company, then those won't share an annual investment allowance because they're not under common control. The other thing to mention on sharing an annual investment allowance is you may have several businesses that potentially share the same premises or office space. Now that does throw into the mix another variation where if you are in the same space, they may see you as similar businesses, which therefore means you may end up having to share an annual investment allowance. Now, I'm mentioning this because it may be relevant to you, especially if you have, say, 10 businesses and you're spending money in all of them, then you may be caught out by the limits. However, it depends what you're spending that may fall into the category of annual investment allowance, because obviously, if you're not going over the limit on all of the businesses, it makes no real difference. But if you are suddenly got 20 businesses and you're spending 10, 20,000 in every business and they're all under common control, you may be hitting the limit, which means it is a relevant point to be looking at. Where do you claim this annual investment allowance? Well, you claim it on your tax return. So as your tax return is done and you put your profits, you'll put on your capital allowance claim, including the annual investment allowance, to reduce your tax bill. This then puts the claim in each year and you pay the reduced amount of tax. Winner. In summary, the annual investment allowance allows you to claim the full amount of the expense that you've just incurred, which is a great way to help reduce your tax. There is a timing plan that if you are looking at spending money on something, say a new computer or you want to get a new van or something like that, make sure you get it within the accounting period. So let's just work on the basis you've got a March year end. If you're thinking of doing it and you think, oh, I'll get it soon, I would be advising you to get it in March rather than April, because then it will reduce your tax bill for this current tax year. If you wait until the April, after the tax year has finished, you'll have to wait a further 12 months before you can get that capital allowances, that annual investment claim that you're putting through. So there isn't many things to be aware of in terms of the capital allowances, but a timing thing is definitely crucial, that if you are thinking of buying something, do it just before your year end to make sure you're going to get those capital allowances claims and help reduce your tax bill. Apart from that, hopefully that gives you a good taster of how the annual investment allowance works. Hopefully today you've discovered what the annual investment allowance is and how it all fits together for your tax calculations. If you have any questions, then please do leave a comment. Please like the channel and do subscribe to us. And let's make tax less taxing.